Well, firstly, Fed Chair Jeremy Powell reaffirmed that they would need to go ahead with rate hikes further, but would also said that it would all depend on the incoming data. Now, he said that no decision has been made yet on the pace of rate hikes, but also warned that inflation continues to remain high and their long-term goal is to bring it down to 2%. Listen into what he has to say.
Larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook. It's certainly conducted under Vice Chair Barr's leadership with input from the staff and, discussions with governors on that committee. And I'm kept broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal. We have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the two things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. Two really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
So more rate hikes coming in there, according to Jerome Powell. And we have Peter Cardillo, who's the chief market economist of Spartan Capital Securities, weighing in on this. Let's take a look.
I would say around 5.5, possibly 5.60. And of course, we're looking probably at a 0.5 point rate hike in March. The Fed is trying to correct its mistakes. They failed on inflation. They were blindsided by the COVID situation. They kept their foot to the pedal, injecting trillions of dollars into the economy. And as a result of that, we wound up with inflation that we didn't see in 40 years. So now they're trying to correct their mistakes, and at the cost of putting the U.S. economy and dragging the global economy into a more severe recession that the markets were anticipating. In fact, if you noticed yesterday and today, while most markets were under severe pressure, what did we see? We saw yields actually coming down, just like they're down this morning. So what is that telling us? Well, it's telling us that now the market is looking forward post-recession. And the fact that the 2- and 10-year spread at one point was at a full percentage point differential indicates a steeper recession ahead.
Well, inflation is stubbornly higher than the Federal Reserve's tolerance band, and that means that there's a good chance it could push interest rates to a 20-year high of 6%, says Blackrock's Chief Investment Officer. Now, Rick Ryder, who's the CIO at the world's biggest asset manager company, pointed to the US economy's resilience in the face of aggressive rate hikes.
And the US labor market is in a sweet spot as companies continued to add jobs ahead of street estimates. According to payroll services firm ADP, private payrolls were up by 242,000 for the month of February after an upwardly revised 119,000 increase last month.
Well, Germany is reportedly considering banning select components from Chinese firms, including names like Huawei and ZTE, under the 5G networks. Now, a Chinese embassy spokesperson says that they are strongly dissatisfied with the said decision if true. Now, do remember, Huawei has been accused by numerous governments of posing national security threat.
And staying with China, the country is now mulling to overhaul its financial regulatory system by combining the central bank and securities regulator under one entity. This according to a draft released from the ongoing parliamentary meeting. The moves come as Beijing of late has ramped up regulations on the parts of the economy developing quickly.
Well, United Nations and Ukraine call for extension that will allow export of Russian and Ukrainian wheat and fertilizer through the Black Sea. Now, important to note here is that both Russia and Ukraine had signed this United Nations-backed deal for a starter of 120 days last July, an agreement which was seen upholding the significance of averting the threats of global food crisis.
And lender to the crypto industry Silver Capital has said that it is winding down on operations and liquidating its bank. Silvergate is one of the two select banks for crypto companies. Cash-strapped crypto exchange FTX was a major Silvergate customer.
Well, all eyes on the 2 days a Bank of Japan's monetary policy meeting. Investors eyeing policy changes coupled with governor's final policy surprise.
And the United Kingdom has announced a new law to crack down on illegal migrants. As per the new law, anyone entering Britain illegally will be detained and swiftly removed to their own country. Prime Minister Rishi Sunak has warned illegal immigrants entering Britain, saying that every illegal immigrant crossing the UK border will be deported and will not be able to stay in the country or claim asylum. He further said that the government tried it every other way and it did not work out, following which they had to take this step. Here's Rishi Sunak's rationale. Listen in.
All I can say is, we have tried it every other way and it has not worked. So I say again, my policy is very simple. It is this country and your government who should decide who comes here, not criminal gangs. People must know that if they come here illegally, it will result in their detention and swift removal. Once this happens, and they know it will happen, they will not come and the boats will stop.
Well, for now, let's slip into a short break and we'll be back with more news on the other side.